What's up guys, welcome back to the channel. This is going to be a very quick one. In this video I'm going to show you one of the best order block trading strategy you've ever seen. This is one of the best order block trading strategy I'm going to teach on this channel. So let's jump straight into it. This strategy, you're going to need two time frames, okay? You're going to need two time frames. One, you're going to need the daily time frame to identify your order flow and identify your order block, while the second time frame you need is either the 15 minutes time frame or the 5 minutes time frame, and one of these time frames you're going to use it for your entry. Okay, if you need a quick entry, you can use the 5 minutes time frame, and if you want to use the 15 minutes time frame, it's still a very good time frame. On the daily time frame, the order flow is bullish. Okay, I know you understand order flow correctly. So what you want to do is you're going to identify an order block. You might have an order block at the extreme level, but if your order block is maybe at a level right here, is still okay, it's still very okay, as long as you've measured with your Fibonacci tool and you've understand that the zone you're trying to trade from is actually at a premium or a discount level. I know you know how to use the Fibonacci tool correctly. So that is what you're going to do, identify that, and let's say in this case our order block is at this particular zone. So you're going to wait for price to come to this particular zone and you drop down to your entry time frame to look for your entry. So why are we using the daily time frame and this lower time frame as a framework for this trading strategy? Remember, if you spend your time looking at the chart most of the time, if you're good at trading with smart money concepts, one of the things you're going to understand is that once we have an order block, so let's say that this is our order block right here, what you will notice is that once price comes back to an order block, price will always give a little reaction to that order block. If the order block is going to hold, price will react and continue moving to the direction. But in some cases, if the order block might not hold, price might come to that order block, give a little reaction maybe before the order block fails. We want to capitalize on those little reaction price usually give on an order block before it fails. We don't care if price is actually going to move to the predicted direction. We don't care if price is actually going to respect the analysis and move to the direction. But what we want to do is we want to capitalize on the little reaction price usually gives before we see a retracement or a continuation or maybe price fails. Okay, so that's what we want to capitalize on. So if you pay attention to what price does when it's at an order block, you will notice that 80% of the time price always give a little reaction once it mitigates an order block. So that's what we want to do. We want to wait for price to come back to the order block. We're going to go down to the 15 minutes time frame or the 5 minutes time frame, and you're going to wait for a market structure shift. That's on your lower time frame. You see this market structure shift, you're going to wait for it. Once you see this shift in market structure, you map out your zone, you take your entry, and you go for a quick 1:2 or 1:3. Don't take more than that, because that little reaction we usually see from another block will be enough to give you a quick 1:2 or a quick 1:3. And the same thing goes, always use the daily time frame. Like I said, the daily time frame is the first time frame you're going to need. Firstly, you want to identify the order flow of the markets. What you're going to do, you're going to look for the very first order block you have. If the first order block you have is at the extreme zone, it's fine. If you have it before the extreme, measure with your Fibonacci tool to see if price is actually at a premium level, and if the order flow is bullish, measure to see if the order block like this area right here. I'm very sure that this example, this one I use here, price is not at a discount level, but it's just for the purpose of this example. But if you want to take a live trade, make sure that that order block is at a discount level. Okay, make sure that price is at a discount level. So in this particular case, let's say price is at our extreme zone. So what we're going to do, like I just explained, is that we're going to wait for price to come back to this order block. Like always, we usually get little reaction. Even though the order block is not going to hold price, we always get those little reactions. So when price comes to this order block, like I said, what you want to do, drop to your lower time frame, look for that market structure shift. Okay, look for the market structure shift and enter your trade at that area. Okay, place your trade and go for a quick 1:2. Enter your trade at that area, go for a quick 1:2. Very simple strategy, simple and straightforward. So let's go to the price chart. Let me show you live examples. So this is the very first example I'm going to use for this explanation. So from what you can actually see here, this is GBP USD, the daily time frame. Like I said, we're going to use two different time frames. From what you can see, the order flow is bullish, price is pushing to the upside, and from what you can see here, we have a very good order block right here, just like I explained. The very first order block you see right there, that's what you're going to map out. This is a very good order block, and to make it a high probability one and a very good one to trade. You see we have a nice break of structure to the upside. Now price has returned to the order block. What you're going to do is you're going to drop down to your entry time frame. I said you're going to use either the 15 minutes time frame or the 5 minutes time frame, and you're going to do this based on the one you think that suits you the most. Now for this example, we're going to use the 5 minutes time frame. So this is the 5 minutes time frame, and it's going to be our entry time frame. From what you can see, price has been pushing to the downside, and I said you should look for market structure shift. So over here we have a break of structure to the downside, and after that price push to the upside with candles that has large bodies, and you can identify here as your change of character, which we can actually call a market structure shift. So what you're going to do is you're going to look for a lower time frame zone which you're going to trade from, and for me I will prefer this particular one. You see this bullish candle that has large body, I can identify that as my zone. We actually have another bullish candle with tiny body here, but I won't look to consider that. But if you consider that particular candle, you already in a trade. But the way I'm going to do this is my zone, my lower time frame zone, and I will look to take this trade from there. Remember I said you should go for a quick 1:2 trade or a quick 1:3 trade. Don't take more than that. So we're going to play price forward and see how price reacts to this zone. And right now price has actually tapped into this point of interest. You see the lower time frame point of interest, price taps into it, and from what you can see here, if you target from this low right here to this high, this will give you a good 1:3 risk to reward trade. It's going to give you a quick one. So what you're going to do is you're going to target that particular high, and you see price takes that high very quickly and fast. So this is a very simple strategy, and this is where price is currently at. This is GBP USD, the 5 minutes time frame where we got our entry, and today's date is 30th of June, the last day of June. And you see this is a very simple strategy, and it works 80% of the time because price always gives little reaction from order block. So using the daily order block as the zone which you look to trade from, you are very sure that you're going to get a very good reaction from that particular zone. So this is where price is currently at. I will show you a second example before I end this video. So this is the second example, and this is USD CAD, the daily time frame, which is the time frame we use to identify the order flow, and we equally use it to identify our order block. So from what you can see, the order flow is bearish. You can see price has been moving to the downside, and there is one thing I forgot to point out while explaining. You have to take your entry during New York or London session, and the best time to trade is actually during the K zones. Okay, if you take your trade during the K zone, it's going to make a lot of sense. So let's continue. From what you can actually see here, price is bearish and we have a break of structure right here. Then you're going to identify this. You see this bearish candle with a very long wick, you're going to identify that as your order block. A lot of people, while identifying their order block, they focus only on the body of the candle, but personally the way I do, this is my order block right here. What we're going to do is we're going to wait for price. Once price returns back to that zone, we look to drop to a lower time frame for our entry confirmation. And now price taps into the zone, price retraces back, tap into this particular point of interest. So what you're going to do is you're going to drop to your lower time frame for your entry confirmation. So the time frame I'll be using for my entry confirmation right now is the 15 minutes time frame. So let's drop to the 15 minute time frame, and here's the 15 minutes time frame. And from what you can actually see, price is bullish on the lower time frame, but we're going to wait for the market structure shifts, because market structure shifts always explains that we're going to see a possible change in market structure. Okay, so over here price has been breaking structure to the upside, so it's okay to identify here as your low, this particular low right here. So here is your change of character. We're going to play price forward. If price takes this low, we look to enter a trade, but if price pulls back a little and continue to the upside, we're going to identify this particular low right here as the low we'll be waiting for price to take. Now let's see how it goes. And now you see price takes the low, you're going to identify your lower time frame points of interest. Identify your lower time frame points of interest, and from what you can see here, this is your zone right here. This is the zone we'll be looking to trade from. You're going to enter your trade right here, target a quick 1:2 or 1:3, and if you look from that area to this zone right here, you can get a very good trade which is about 1:3. So let's see how price goes and how it's going to be. You see price taps into the zone and we see a very good reaction to the downside. And if you wanted to take another trade, this zone right here, after we got this break of structure, this particular zone right here would have been another place you would have looked to enter That's if you're not considering this week right here, this particular week. If you're considering only the body of the candles, you can see this is a very good zone to take a second trade. Now playing price forward, you see price moved directly to our target. You see price came very close to the target and we're getting this pullback, but I'm very sure that price is going to take this particular low right here. Price takes the low and it continues to the downside. So this is a very simple strategy, and the way I teach, I say after teaching anything, you should go back and backtest. Go back to your price chart and backtest this strategy. So if you wanted to take a fourth trade, this would have been another good zone to take that particular trade. So that is it, and I hope you understand exactly how to use this particular strategy. This is a very simple order block strategy which you can use, and I explain the psychology behind it, why we look to trade with this type of setup and strategy. So that's it, and I hope you got value from this particular video. Thanks very much and see you in the next one.